We just saw one of the most revealing signals in the past 40 years for Toronto's real estate market. The numbers are in for July 2025, and the time that I'm recording this video in August 2025, I can tell you about those numbers and the signal that we saw. The numbers come with mixed emotions. Sales are strong, prices are still falling, and the sentiment is shifting. For months, buyers have asked the same question in basically hushed tones. Have we hit the bottom yet? Today, we are going to finally have enough evidence to start answering that question with real data. But before diving into this, please make sure to subscribe to my channel to support us in order to make more educational contents like this for you. And if you need to book a consult with us, please use the link down below. Now let's answer the $1,000,000 question. Is the bottom in or not? Let's begin with raw facts. Sales for July 2025 came in at 6,100 sales compared to 6,243 in June 2025. That's a modest decrease of 2% month over month. But look at the increase of a year-over-year number of sales. It was a significant increase of 10.9%, which is almost 11% compared to July last year. The average GTA home price dropped from 1.1 in June to $1,051,000 in July. That's a 4.5% month-over-month decline and down 5.5% year-over-year. So you see what's interesting here. The sales are up almost 11% year-over-year, but the prices are down 5.5% year-over-year. So new listings basically also declined from 19,839 in June to 17,613. So meaning that the supply also is shrinking by a bit. It's not that much, almost 11% drop. It's not the huge drop, but that gives us a signal that also the new listings are also dropping. And let's talk about active listings. The active listings also declined from 31,600 in June to 30,215 in July. That's a 4.4% decline in available inventory. The MLS Home Price Index or HPI composite benchmark also declined 5.4% year over year, which is normal because we saw the average prices. But if we seasonally adjust the HPI, we're going to see that it remained flat compared to June. Now let's start decoding these mixed signals. At the first glance, it seems contradictory. Prices are falling, yet the demand is rising and the inventory is shrinking. But this is exactly the kind of tension you see in the markets trying to find the bottom. Affordability has improved thanks to lower prices and modest drops in the borrowing cost. Sales activity is holding steady despite lower inventory and listings are drying up. These suggest that sellers may be withdrawing in the anticipation of the stabilization of the prices or price stabilization. What this shows is that buyer psychology is also shifting. Instead of waiting for an elusive rock bottom, some buyers are stepping in now to capitalize on these price drops. Let's look at the Toronto Real Estate Board's basically report and see what they are saying. I'm going to quote the exact words, the exact sentences that I saw in those reports. It says that the GTA experienced the best home sales result for the month of July since 2021. So that's a powerful statement. Despite the continued narrative of a market slowdown, this was the best July in 4 years. Sales were up relative to listings, suggesting a modest tightening in the market. This is also subtle but critical. When sales outpace new listings, inventory shrinks and competition can re-emerge in these kind of markets. And let's read you another sentence. It says that improved affordability is starting to translate into increased home sales. So you see what's happening. A market doesn't need to hit bottom perfectly to begin recovering. Often recovery starts when buyers stop fearing basically future downsides more than they fear missing out. Now let's talk about the price decline. The average price in July dropped about $50,000 from June. That's a 4.5% price decline month over month. That's steep. But here's what's interesting. The MLS HPI or Home Price Index, the composite benchmark, stayed flat from June to July. This benchmark removes the noise of extremely high to low end sales. It suggests that while headline prices are volatile, underlying value trends are stabilizing. Now let's talk supply and demand. New listings fell 11.2% month over month, and sales basically fell just 2.3%. This means Absorption rates are improving. Fewer listings combined with steady demand naturally creates pressure on the existing inventory. This is not yet a seller's market, but it is no longer the deep buyer's market either. Now let's take a look at what type of properties are driving this market. Detached homes are averaging about $1,360,000 in the GTA, and they are still in the correction mode, but holding firm, especially in a Toronto. The average detached house, basically in 416 area, Toronto proper, is about $1,572,000. It's been hovering around $1.6 million in the past while. Condos are also averaging around $684,000 in Toronto, in the city of Toronto, and $650,000 across the GTA. So volatility remains high here, but affordability is attracting younger buyers and first-time home buyers to the market. Semi-detached and townhouses show balanced performance. There's good volume and moderate price improvements in those two type of properties. The biggest momentum is in the low to mid-tier price bands. This is typical of a recovery beginning from the base. Let's talk about the mortgages. So TRREB notes the need for more rate relief to support further recovery. As of August 2025, the Bank of Canada held rates steady. So fixed mortgage rates have begun ticking down slightly, and any substantial rate cuts in the fall of 2025 could spark a mini surge in demand, in my opinion, especially for basic pre-approvals that we missed the last cycle. So the million-dollar question, is the bottom in? So is it or not? Arguments for yes. Sales are stable month over month and sharply up year over year. MLS benchmark prices have stopped falling and listings are tightening. Buyer psychology is improving. So these are the arguments that support yes to that question, to the million-dollar question. So arguments for a no to the million-dollar question. Average prices are still declining. Mortgage renewal may still trigger forced sales, and the economy remains fragile. The data suggests that we are very close to the bottom. If not July, then likely by fall 2025. But again, we need a few more months of data to be able to confirm these findings. So these are my final words. Toronto real estate market is no longer in free fall, in my opinion. It's in transition, and July 2025 may go down as the moment or the month when that transition started to become visible in the numbers. So buyers are buying, sellers are adjusting, and rates are stable. Prices may dip again, but the era of steep monthly declines appear to be ending. We'll need August, September, and October data to confirm that. But if you're asking whether the bottom is in, the answer is almost, in my opinion. Almost, I don't want to say for sure because I need a few more month data. Once I get more data, I can tell you if the bottom is confirmed or not. Make sure to follow me to know before anyone else. Just so you know, I was the first person to call the top. I will show you the proof in another video.